construction spending is slipping about 1% in 2025 after last year's surge. Best-run firms are having their strongest year ever. Today on Construction Genius, we'll uncover what they're doing differently, the three sectors growing by double digits while others contract, why 42% of CEOs are actually optimistic about tax policy despite tariff chaos, and counterintuitive strategy that's helping smart contractors lift margins while competitors fight for scraps. This is your playbook for turning market disruption into competitive advantage. Let's dive in. This is Eric Anderton, and you're listening to Construction Genius, a leadership masterclass. Thomas Edison said that genius is 1% inspiration and 99% perspiration. If you're a construction leader, you know all about the perspiration, and this show is all about the 1% inspiration that you can add to your hard work to help you to improve your leadership. Welcome to Construction Genius, and I'm your host, Eric Anderton. Today, we're going to unpack the most important data release of the year, FMI's North American Engineering and Construction Outlook, combined with the Construction Industry Roundtable Sentiment Index for Q3 2025. That was kind of a mouthful, huh? These two reports capture what 130 construction CEOs are seeing and planning across the U.S. market. Here are the three game-changing insights we're going to explore. First, the flight to quality. Overall spending dips about 1% from last year, but infrastructure and specialty sectors are booming. We'll pinpoint where the money's flowing and why selective bidding is the new survival strategy. Second, the profitability paradox. Companies are winning by doing less, not more. We'll reveal why more than half of firms are hiring while simultaneously becoming choosier about projects. And third, the 2026 positioning play. Tax incentives and infrastructure funding are setting up a multi-year opportunity wave. We're going to map out how to position your company to ride it. By the end, you'll have a clear action plan for navigating 2025's transition and emerging stronger in 2026. All right, let's kick it off here with the market reality check. According to FMI, total U.S. construction spending is projected to decline about 1% in 2025. Following a 6% growth in 2024. This isn't a collapse, it's a market separation. The bright spots are pretty clear. Water supply construction, up 12%. Sewage and waste, up 7%. Highway and bridge work, 14%. Meanwhile, commercial construction is down 9%, weighed down by retail contraction and lingering office vacancies. From the CIRT Sentiment Index, optimism has rebounded sharply. The overall sentiment index rose from 54 to 65. The design index from 44.9 to 58.5. That's 130 industry leaders saying conditions are improving, but through selectivity, not necessarily through volume. So picture two contractors. Contractor A chases every bid, fighting to hold revenue. Margins shrink, stress rises. Contractor B trims the bid list 30%, focuses on negotiated work, and improves margins by 300 basis points. Same market, different approach, different discipline. 40% of CIRT members report more projects. 58% report higher dollar volumes than last year. So here's the takeaway. Being everything to everyone guarantees failure. The winners are laser-focused on fit, margin, and client alignment. You'll never escape right project, right client, right location. All right, let's think about the tariff and tax reality. So there's a lot of policy turbulence going on. CIRT CEOs are clear. Over 50% expect trade and tariff policy to have a negative effect. 63% say those impacts are indirect, mostly through client cost sensitivity and supply chain delays. Only 37% feel direct cost pressure. The real drag is client paralysis. Projects delayed 30 to 45 days as owners second guess budgets. So here's where the smart firms pivot. While everyone frets about tariffs, tax policy under the big beautiful bill is quietly helping. 42% of executives view it as a positive, 46% as neutral, and just 12% as negative. Accelerated depreciation and investment credits are giving owners reasons to move forward if you help them see it. One mechanical contractor added a total project economics analysis to every proposal, showing first year, 5-year, and 10-year after-tax costs. Their negotiated work win rate jumped 40%. So the lesson's pretty straightforward. Don't just bid the scope, educate your clients on tax and life cycle economics. The market rewards builders who evolve from contractor to advisor. Sector opportunities, follow the money. Let's pinpoint where growth is real. The double-digit winners. Data centers, up 32%, now a $38 billion market. Firms that can solve power and water infrastructure challenges are commanding premium prices. Healthcare outpatient facilities are growing fast as care shifts from hospitals to communities. Here are some steady performers. Highway and street work, around $145 billion and stable. Federal highway funding continues through 2026 with more than $5 billion allocated to bridge work. Power infrastructure, flat at $156 billion, but strong in grid hardening, transmission, and nuclear expansion. And here are the danger zones. Office, roughly 20% vacancy. Haven't really recovered from the pandemic yet. Conversions to residential and mixed use are the only bright spots. Retail commercial, down about 9%. Store closures are accelerating, shrinking new building opportunities. Manufacturing, down 5%, as mega projects move from groundbreaking to execution. So here's the key insight. The top firms aren't chasing every growing sector. They're building deep expertise in 2 or 3 areas where they can deliver exceptional value.
All right, quick break to talk about my book, Construction Genius. This is what I want you to do. Go to Amazon, search for the book, read all of the 5-star reviews, because there's a ton of them. Over 50 to be precise. And the reason I want you to read them is because real people wrote those reviews who've actually read the book. And it'll give you an idea of why you should go and buy a copy right now on Amazon. And here's the deal. If you purchase 10 or more copies for your company, and then send me an email, eric@constructiongenius.com, I'll come in via Zoom and do a 1-hour Q&A and a bonus training session with your team at no charge. I normally charge $4,500 for an hour of my time. And again, for you, I'll do it at no charge if you buy 10 or more copies of my book. And the reason you should buy it is all in the title. It's effective, hands-on, practical, simple, no BS, leadership, strategy, sales, and marketing advice for construction companies. So if you're in the construction industry, this book is for you. So you can get it on Amazon. You can also get it on Audible in the audio version as well, narrated by yours truly. And I know you'll really enjoy it. So go out and get the book. And now back to the interview.
The profitability paradox. Here's the counterintuitive reality. Firms are expanding profits while shrinking their pursuit pipelines. When asked about 2026 resilience, CEOs rank profitability number 1 and backlog quality number 2, ahead of market share and geographic expansion. Behavior matches intent. 47% are increasing selective bidding, 29% are reducing aggressive bidding, 41% are pursuing more alternative procurement models. They're saying no more often, and it's paying off. One CEO shared their pursuit scoring matrix, and they score every project on margin potential, payment terms, client relationship, risk profile, and strategic value. Hopefully you're doing something similar. Anything scoring under 70% doesn't get pursued. Their bid to award ratio dropped, but margins rose 300 basis points and cash flow improved. And we're always happy when cash flow is good. Another data point, 42% of firms are diversifying services selectively. Concrete firms, are adding post-tensioning. Electrical contractors are adding commissioning. Same clients, same projects, but increased scope. The profitability paradox is real. Perhaps you can do less and earn more, but focus on the right projects with the right clients in the right locations. So here's the 2026 positioning play. Both FMI and CIRT point to a major setup for late 2026. Tax credits mature, infrastructure funding peaks, owners regain confidence. So here's your positioning strategy. Number one, build infrastructure capabilities now. Partner if needed. The funding is multi-year, margins are stable, and payment risk is minimal. Number two, develop conversion expertise. Office to residential and retail repositioning are accelerating. This specialty will command premiums. Number three, solve the labor equation. CIRT members are investing in technology and prefabrication to cut field labor by 15 to 25%. One CEO said, we're planning for the same revenue with 20% fewer field hours. Number four, strengthen your balance sheet. Cash and bonding capacity will separate survivors from spectators when the next wave hits. And number five, expand client advisory skills. The contractors winning now are trusted advisors, expert in tax incentives, financing, and life cycle costs. 2025 isn't a decline year, it's a repositioning year. And the best leaders aren't waiting for the market to recover, they're engineering their own momentum.
Think about the last time you promoted someone into a leadership role and it failed. Why did it fail? I can tell you one reason. People know how to build projects, but they don't know how to build and lead teams of people. Construction comes with its challenges that only insiders truly understand. Generic leadership training doesn't cut it. You need a program to train your leaders built specifically for construction professionals led by an industry expert. And my online course, The Shift, is exactly that course. It has 5 modules. It'll teach your people how to control their calendars and reduce stress and embrace chaos and accomplish their critical tasks. It will teach them the 3 essential messages they have to communicate every day in order to motivate and lead their team effectively. It'll show them how to build and lead a high-performing team, give them a framework for running effective meetings so they'll be able to solve problems in less than an hour, and also give them a higher perspective on their leadership that will enable them to work on the business and on their teams and not get stuck in the weeds micromanaging. So go out to my website, theshift.constructiongenius.com, read all about the course, and then enroll yourself and your leaders in the course, and I guarantee that it will transform your leadership. If it does not, you take the whole course and you didn't get benefit from it, you just send me an email, eric@constructiongenius.com, and I will cheerfully refund you 100% of your money. I'm really confident this course will transform your leadership. So again, go out to the website, theshift.constructiongenius.com, learn more about the course, and start taking it today.
So here's your action plan. Let's recap the 3 game changers. Number 1, the flight to quality is real. Infrastructure and specialty sectors are thriving while commodity construction shrinks. Pick your spots carefully. Number 2, the profitability paradox works. The most successful firms are doing less, but earning more by being ruthlessly selective. Number 3, the 2026 opportunity is forming now. Tax credits and infrastructure funding will fuel the next expansion. Position today to capture it. Here's your immediate action plan. This week, audit your pipeline and consider dropping the bottom 20%. This month, identify one infrastructure or specialty sector where you can build a competitive advantage. This quarter, shift towards negotiated or alternative procurement where you can prove unique value. Market disruptions don't destroy value, they redistribute it. The question is whether you're positioned to capture it. CIRT CEOs have spoken through the data. They're not waiting for the market to improve. They're creating their own weather by being selective, strategic, and focused on profitability over volume. Thank you for listening to today's episode of Construction Genius. Hope you found this helpful. Links in the show notes to both the FMI and the CIRT reports. Hope you find them useful, and we'll catch you on the next episode. Thank you for listening to this episode of Construction Genius. Hope you found that 1% of inspiration to help you in the next few days. If you like the show, please give us a 5-star review on iTunes, share it with other construction leaders who you think would benefit, and always remember that the show is brought to you by Kick-Ass Meetings. I've been working with construction leaders since 2004, teaching them how to run extremely effective problem-solving meetings that gets their people collaborating, taps into their creativity, and to get yourself a free copy of the Kick-Ass Meeting Report, go to www.ericanderton.com/kickassmeetings. Grab yourself that free report, read it, use it in your business. You'll find it extremely useful. And thanks again for listening.